Good morning, Jags. This is Fahad. Today is Tuesday, February 2nd. Let's get started. I have Chronicle here with me. And today we're going to be launching a brand new series on Jaguar Media. This will be called Electronic Gaming Software Series. This series is a brand new one in which we're going to focus entirely on the gaming software companies. And as you can tell just from the picture that's in front of me, we're going to start off with Take-Two Interactive. But over the next several weeks and months from this point on, there's going to be a lot of coverage on many, many different stocks. And so, with that said, let's bring in Chronicle over here. Hi, Chronicle. How are you doing?
Morning, Fahad. I'm doing great. Looking forward to this.
Yes, excellent. I've been looking forward to this one ever since you presented this idea of creating this brand new series in Jaguar Media, because the similar to the coverage that we had the previously with the Chinese Tech Demystified series, which was so well received by Jag clients, and so many stocks performed so well. And this is the second one in the same phase that we're attacking a particular category of stocks and hope to dive into all of them with incredible amount of work and research to see from this point on. So I'm sure there's going to be a lot of learning process for everybody from here. So with that said, let's get started. Take-Two Interactive. Now, I do want to quickly mention to all the audience listening to this that you're going to notice in this presentation that there's going to be the initial part of this presentation that's going to be bearish on the stock in the short term. But longer term, this is going to be bullish picture that will be presented by Chronicle. So we're going to dive in here and we're going to tell you exactly what we think is going to happen in the first half of this year, followed by the second half. So Chronicle, take it over from here.
Sure. So if we go to the second slide, I just wanted to introduce here the entire coverage that we've opened on the electronic gaming software industry. And like you said, today we're going to be looking at Take-Two Interactive, which we're bearish on in the near term, but bullish on a long term on an investment horizon. Now, moving to the third slide. So assuming you're currently watching this on Jaguar Media website, if you look below the video, there's a link that's going to take you to a 25-page research note, which is supposed to complement this video. So I've taken a screenshot of the table of contents you're going to see on the first page of the note, which is on this slide. And basically, the way we're going to approach this is that we are only going to focus for this video on the last two sections of the note for this recording. Because if Fahad and I were to cover everything from the note, this video could potentially go on for a couple of quarters, which is not something either of us will want. So if anybody wants to get the full experience, just watch the video, then you can read the research note at your own pace. Okay, so without further ado, let's get into why we're bearish in the near term. So right now, if we look at the pipeline over the next several quarters, there's a lack of clarity apart from the re-release of Grand Theft Auto 5 on new consoles later this year, while at the same time, Take-Two stock has gone up roughly 35% over the last couple months, and right now it's trading at a forward P of 35 compared to peers like EA at 24 and Activision at 26. So there's a sizable valuation premium here. And going to the next slide, if you're wondering why this valuation premium exists, it's because the market is expecting very robust earnings for the upcoming fiscal year 2022, which begins this spring. And I think it really comes down to the following three assumptions that the market is making here. Number one, the market is assuming that there's going to be very strong unit sales and microtransaction revenue from NBA 2K21 because of the console refresh and the fact that the My Career mode, which I detailed extensively on pages 16 to 19 of my note, the player's save progress for that popular game mode is not going to carry over. So there's probably going to be a spike in microtransactions as players will want to quickly get back to the levels that their avatars were at previously. Now, if you didn't understand what I just said, the explanation is all in the note. And then don't forget, we also have the release of NBA 2K22 later in the year. So with regards to this bullish argument, I completely agree that this year is going to be a bumper one for NBA 2K. So I have no problems here. But moving on to the second and third points, here is where I start to disagree with some of the bulls. And I think they're going to have to rein in their expectations. Because, first of all, I think there's going to be continued deceleration in Red Dead Redemption 2 full game sales and Red Dead Online microtransactions and engagement. And then the big one that everybody is excited about, the market seems to be expecting that this upcoming release of GTA 5 Enhanced Edition, plus the release of GTA Online as a free standalone, the consensus seems to be expecting that this is going to result in GTA related bookings reaching near 2014 levels, which is when the last console refresh took place. And I'm worried because this could potentially leave a lot of room for disappointment.
Great stuff. Now, I understand the bull case about NBA, which is longer term in nature. But what would be one or two most important reasons for you to believe that the Red Dead Redemptions 2, as well as the GTA Online related bookings, are going to disappoint? Basically, what's the main reason for you to have a disconnected view from the street?
So moving to the next slide, let's tackle Red Dead Redemption 2 first. So on pages 10 to 12 of my note, I laid out a lot of the idiosyncrasies and nuances that are basically holding back RDR2 and Red Dead Online from ever achieving the kind of all-time numbers, all-time record numbers that GTA 5 has put up. Like what it boils down to is it's not everybody's cup of tea, whereas GTA 5 caters universally to a wider variety of gamer preferences. Apart from that, I also talked about how Red Dead Online is a much more tedious game to grind for in-game money compared to GTA Online. If you're not paying, huge amounts of microtransactions, which is the vast majority of players. So Red Dead Online requires much more patience, and the game also tends to box players into specific roles rather than letting them fluidly decide to do whatever they want. So as a result, what I'm observing is that interest in Red Dead Redemption 2 and Red Dead Online has been mostly flatlining over the past year. Like, for example, we can see that engagement with the games on Steam doesn't exactly paint a picture of acceleration here. And when I go to the subreddit of Red Dead Online, the general consensus there among players is that the game is not exactly dying, but it's not thriving either. And that's consistent among players on all platforms and consoles, so not just the PC. And the concerning thing is that this deceleration is happening even though Red Dead Online started being offered as a $5 standalone in December. And because that $5 price tag is going to be jacked up to $20 in February, that's not going to help. So this is the current situation for Red Dead Redemption 2. Now let's look at the third point, my rebuttal to the third point on the next slide. This is where we're
One,
going to address.
sorry, Chronicle, one quick question on this slide before I move on. So even with a price tag of only $4.99 in December, the charts that you have, which basically speaks for the channel checks that we've observed for Red Dead Online, are essentially going down. You're just not seeing the user engagement there. And then on top of it, this thing is going to be increased to an introductory price of 19.99 starting from February. I mean, that just doesn't sound like right for a product that is actually doing well with the reduced price currently. So I can see where the bear case is now coming from as a disappointment versus a street expectations. Now, with that said, let's go to the next point on the GTA 5.
Sure. So this is where we address the overly optimistic expectations for the upcoming releases of GTA 5 Enhanced Edition, plus the free standalone GTA Online. So the big mistake here that a lot of bulls are making is that they are linearly extrapolating by looking back at the massive success of these titles when they first made the jump from PS3 to the Xbox 3 and the Xbox 360, sorry, to the PS4 and Xbox One, which was almost 7 years ago. So obviously, the first problem with that sort of linear extrapolation is that this is nearly an 8-year-old game now. Like it's going to be a very tall order to expect an 8-year-old game to sell as well as when it was barely 1 year old. And I can tell you that there is a lot of fatigue right now within the gamer community regarding GTA 5. Like when Rockstar first announced last year that they were going to bring this enhanced edition to the new consoles, I have to say that the response to this news was very lukewarm. And there's a growing number of people and journalists who are mocking the company for attempting to milk the same game over three different console cycles, whether or not that criticism is justified. And so, what I believe is going to happen is there's going to be a significant percentage of existing GTA 5 owners on the PS4 and Xbox One who are going to forego buying the enhanced edition this time round because they're not going to be interested in experiencing the single player campaign again, regardless of the additional content that Rockstar is adding. And then on top of that, Rockstar is currently giving out $1 million worth of in game currency per month to GTA Online players who have a PlayStation Plus membership leading up to the launch of the free standalone. So that's not going to be good for microtransaction spending on shark cards. If you don't know what shark cards are, that's on pages 6 to 10 of my note. Okay, next slide. Now, the second reason why I think it's dangerous to be doing linear extrapolation of the success from 2014 is that GTA Online is very different today than what it used to be 7 years ago. Specifically, the game and its community are much less friendly to new players these days. So, first off, the virtual economy within the game has succumbed to pretty high inflation compared to 2013 and 2014 levels. Like basically, the prices of cars and property within the game have been adjusted higher over time to account for existing players getting a lot richer. But what this does is it suppresses the upward mobility of new players. Second problem, which I believe to be more serious, is that there's a growing number of griefers within the community. Now, if you're not familiar, griefers is basically the term for people who are intentionally making the game unenjoyable for everyone else, whether it's hacking or cheating or shooting and killing your own teammates for no reason or sabotaging other people's progress in missions, things along those lines. I'm not going to go into the specific things that these griefers are doing in GTA Online, but if you want to know more, that's on pages 21 to 24 of the write up. But the key thing to note here is that the community for this game has become a lot more toxic today than it was back in 2014. But to be clear, I'm not saying there aren't any more new players. In fact, there are still lots of them. However, if we're going to take 7 years ago as a comparison, I think this year is going to fall short of that very high bar in terms of new players. That's essentially what I'm saying here. And then finally, moving to the next slide, which is my final reason for why I don't think history will repeat itself, is that there's a lot more competition in multiplayer gaming these days compared to 2013, 2014. And what I'm noticing from reading gamer forums and the GTA Online subreddit is that the game is no longer as active as it used to be because of gamers who have stopped playing the game altogether, or they're having to split their time among other games that are out there today. Okay, now just one more slide before I hand it back to you, Fahad. Putting everything together, currently Goldman Sachs is estimating GTA related bookings for the company to come in around 2014 levels. But in contrast, we are estimating for it to come in roughly 30% below at $1.22 billion. And that's also taking into account the possibility that the enhanced edition is not going to be priced at the full price of $69.99 because it's not exactly a new game, right? And then for total net revenue, our internal estimate is currently at $3.29 billion, which is about 5% below sell side average.
Most of these gaming publishers, they largely trade on bookings number rather than the actual net revenues or even earnings for that matter. Bookings is what matters the most. And this slide with the picture on the left-hand side of this screen, comparing what Jaguar Analytics view is on fiscal year 2022 estimates for booking at 1.2 billion versus Goldman Sachs at 1.6 billion. That's a sizable disconnect between what we are coming up with versus what the street is telling us. And so, and considering that the expectations are high on the street, if our view pans out, this stock is basically going to slip rather materially with a multiple contraction in the short term, and that's essentially what this bear case in the short term, particularly in the first half of this year, leads to. Correct? So I don't have the actual chart on this particular slide, but just to wrap up the bear case over here in the short term for Take Two Interactive, given this view on the bookings that's highlighted, the stock is currently trading at $205 per share. Where do you see in the first half of this year a stock coming in? What would be your view as to how much of a pullback we can see before we can see a stronger finish with much more better price action on the stock in the second half of this year?
So I foresee a downside of up to 15%.
So coming in from 205 to about $170 per share. And I'm looking at my screens. That's pretty much where the major VOP support resides. So that's the short-term pullback or correction based on these consent out of consensus views that we are highlighting over here that makes the bear case. But then once the stock is reset, once the sentiment is washed out, that's when we believe a brand new bull case can come in with a stronger finish for the end of the year, which takes me to the next slide. And this is the longer term bullish view on Take Two Interactive. Now, let's start off over here. Tell me about this one.
Sure. So now we're looking at why we should be looking to buy the stock if it dips over the next 3 to 6 months. So all things considered, Take-Two is still a company that's in a very strong position. I don't think a lot of gamers are going to disagree with me if I say that the company is a leader in open world action games, even more so after CD Projekt messed up their launch of Cyberpunk 2077. So this puts Take-Two in a very good stead when they eventually announce a new Grand Theft Auto, whenever that may be. And then my second reason, if we look at these couple charts, we can see that ever since the company stumbled upon their microtransaction model, they've been reporting improved gross margins at roughly 50%, as well as printing money essentially. Now, going to the final slide, my third bullish argument is that the company's NBA 2K series is a massive asset, especially now that they've added a free roaming community feature, which you can read about on pages 16 to 19. And then don't forget, we also have the upcoming reboot of an NFL title and the return of WWE, which I consider to be free options, so to speak. So if those two titles manage to do well, then that's a bonus for me. Reason number four is that management is continuing to make the company's portfolio of offerings increasingly more comprehensive. Like if we look at the most recent earnings call, Take-Two CEO Strauss Zelnick said that they have now doubled their release pipeline over the next 5 years, which is the strongest in history. And that's going to include new IP, not just existing. So the future is going to be exciting. And finally, my last point I wanted to make is that this company is also continuing to build on its mobile gaming platform following its acquisition of Social Point a couple years ago, as well as China, where the NBA 2K Online series is highly popular. So if we put all this together, I think the outlook over the next several years for Take Two is very robust, and therefore I have absolutely no problems recommending this stock as a long-term investment. So if we end up seeing any sort of moderate dip as a result of our near-term bear case, I think that would present an attractive buy and hold opportunity.
Fantastic. Great wrap up over here. Just to be clear, one more time to all the audience over here, is that a short term potential correction that resets the sentiment on the street because we believe that the consensus is way ahead of itself. And there's going to be a correction phase in that particular sentiment. a 10 to 15% pullback that brings the stock from $205 per share to roughly about 170 during the first half of this year, followed by a gradual recovery from here, given the very strong pipeline and a very strong bull case presented here for esports and the new pipeline and new games that are coming out, and particularly the NBA franchise that's going to kickstart the growth. So that's what we are leaning to, a short-term bear, long-term bull. All right, Chronicle, fantastic stuff over here. Thank you very much for presenting this. Folks, just a reminder to everybody, this is the episode one of this brand new coverage that we're starting on the electronic gaming software. This video will be presented shortly in Jaguar Media, and please feel free to download the entire 25 plus page write up that's attached to this on the website as well, along with all of these slides. Chronicle, remarkable stuff as usual. I'll see you guys later. Thank you very much for joining.